So as I was looking at ways to diversify the portfolio, and of course, real estate, going back to my childhood, I had always seen how real estate could be leveraged and it should be a part of a diversified portfolio. So I started to invest in income producing real estate. Now, at the time, to me and to many of the investors who start down this path, that typically means single family residence houses that you rent to somebody. It could be anywhere from 1 to 4 units. And so that's what I started to do is rent those houses, do some fix and flips, and then just started to grow that portfolio. And you get to a point where it becomes hard to scale a single family rental business. So I started to look at ways in which we could scale and perhaps leverage that same asset class, but take that business to the next level. And that's when I started to come across more of the commercial multifamily or apartment complexes, and started to see that, well, these apartment complexes are not just owned by some huge, large company. It can also be owned by the small guys like us. And part of the reason why we created Penn Capital was to be able to identify good apartment complexes, good commercial real estate opportunities that we can sort of bring to our contacts, our what we call our equity partners or investors, and who can co-invest with us in these deals. So to us, it's almost like a platform that we identify good deals that we want to invest in, and then we extend that opportunity to others as well who could join us in this investment. And as we were researching that space, there are added benefits, significant tax benefits that come along with apartment complexes that didn't exist in some of the other commercial real estate classes, which allows you to take a large amount of depreciation. So this allows you to, let's say, defer the taxes that you're about to pay on any of the rental income that is produced. It also allows you to do what's called a 1031 exchange, where once you sell the property, you can defer the taxes even further and continue to build on that and get a compounding effect on your returns, which is very powerful. And it also allows you to control the value of the property. So in single family real estate, the value of the property is primarily driven by the location. And yeah, you can make some improvements to the property, but there's sort of a glass ceiling as to how high the value of the property would be worth in a particular neighborhood. Versus with apartment complexes, the value is really based on the net operating income. So you can increase the bottom line, so to speak, of the property, either by efficiencies in operations or by enhancing the revenue by making improvements to the property. And for every dollar that you increase or bring to the bottom line, the value of the property increases anywhere from 15 to 20 fold. So that's extremely powerful. And given that you're talking about assets that are tens of millions of dollars, you can see a substantial increase in the value of the property by making a few enhancements. So those were the main reasons that attracted me more towards the commercial real estate, particularly multifamily, versus single family. And at the highest level, you can almost think of what we're doing as a fix and flip, but at a large scale, right? So you just add a few more zeros, but you're buying an asset that's undervalued or underperforming, you're enhancing it, optimizing it, and then you're selling it. We're just doing it at a larger scale.